Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
The public have an insatiable curiosity to know everything, except what is worth knowing. Oscar Wilde, it's better to keep your mouth shut and appear stupid than to open it and remove all doubt. Mark Twain, there is no such thing as public opinion. There is only published opinion. Winston Churchill, I never forget a face, but in your case I'll be glad to make an exception. Groucho Marx, you can fool all the people some of the time, and some of the people all the time, and that's usually enough. Attributed to W.C. Fields.
Turns out, the most beautiful places also send the ugliest invoices. Bermuda tops the list at 123.5, meaning it's roughly 23% pricier than New York, Cayman, Switzerland, Singapore, all premium zip codes with premium price tags. Why? Small islands import almost everything. Financial hubs pay global salaries. Strong currencies do the rest. When capital flows in, rents follow. Meanwhile, India ranks 154 with an index of 18.9. Affordable, yes. But affordability often tracks income levels. Low income is not a free lunch. It's a reflection of purchasing power. Sedans are on a diet. SUVs are at the buffet. January 2026 numbers say it all. Nexon at 23,000 plus, Punch near 19,000, Creta close behind. Even Bolero is still clocking 5 figures. This isn't just auto sales, it's aspiration on wheels. Higher ground clearance, better stance, better resale, and let's be honest, they make traffic jams feel slightly more victorious. Rising incomes and easy financing are tilting the mix decisively towards SUVs. For automakers, this is margin territory. For oil demand, it's steady support. For urban planners, good luck. Not all millions are created equal. Some just cluster better. Switzerland tops the chart with about 156 millionaires per 1,000 adults. The US sits near 85. Even Hong Kong and Australia outpace most of Europe. Meanwhile, China at 5, India below 1. Same planet, very different wealth intensity. This isn't just about income, it's about asset prices. Real estate booms, equity ownership, financial market depth. When stocks and property rally for decades, millionaire density quietly compounds. Highways are minting money, and that's not a pothole. India has already collected 50,345 crores in FY26, 82% of last year's full total in just 9 months. Since FY21, toll revenues are up 120%. Rajasthan, UP, Maharashtra and Gujarat are leading the charge. But here's the real upgrade. Waiting time at toll plazas has crashed from 12 minutes in the manual era to just 40 seconds with FASTag. Now barrierless AI-driven tolling is rolling out. Less braking, more banking. At $2.1 trillion, crude oil isn't just big, it's bigger than the top 20 metal markets combined. Iron ore, gold, copper, aluminium, nickel, all impressive. Together, still smaller than oil alone. Why does that matter? Because oil isn't just traded, it's transmitted. Into inflation, into trade deficits, into airline tickets, fertilizer bills, and geopolitics. When oil spikes, central bankers reach for the aspirin. Metals build economies, oil runs them. Strip out last year's wobble, and the 5-year picture is clear. The MSCI India has outperformed broader emerging markets and with lower volatility. That's alpha without the stomach ulcers. Yes, India trades at a PE premium, but zoom out 10 to 15 years and that premium is right back in its historical lane. Not euphoric, not distressed, just earned. Meanwhile, emerging markets overall have done reasonably well, though China's growth detour makes it the statistical outlier in the room. India is not cheap, it's consistent.